So once again, Goldman Sachs got it right. Commodity prices slumped 9% on average last week, just a few days after Goldman said prices were set for a decline. But for those investors who were left licking their wounds, there's still hope, because the man who predicted the sell-off now forecasts a potential rebound. Head of commodity research Jeffrey Curry says the extent of the pullback has actually created an opportunity. He says the basics of supply and demand will tighten up again, especially in the second half of the year. So I'm joined now by a man who's made his name in the economics of raw materials with more than 20 years of experience. Koen Straetmans now dictates commodity strategy at one of Europe's largest investment managers, ING. Straetmans says that we should scale back our enthusiasm about investing in oil. He joins me live now from The Hague. So do you agree with the Goldman forecast then that there could be more upside potential for commodities in the second half of the year?
Well, I tend to effectively agree with that point of view, because according to me, there has been a wave of profit-taking based on scaling down of global economic outlook, which leading indicators rolling over in the developed world, and at the same time also the nearing of QE2 in the States. I think both of them are probably overdone because there is some slowdown in global economic growth, but on the other hand you see some restocking at the same time in China. And that is quite an important counterweight. And as for the QE part, I think even if QE is scaled down or stops in June, rates can stay low, and that will be a positive pulse for commodities still. So I'm not negative. Actually, the drop back in commodities to me leads me to become probably a little bit more optimistic again.
Okay, but one thing that you're perhaps not, or I should say less enthusiastic on, is energy. You've reduced your position on that. Do you anticipate further price falls, if not volatility, as we go through the year?
Yeah, with respect to energy, I must say I've scaled back my position at 124 at the Brent. So since then we've seen quite a substantial correction. And my price range basically is between 110 and 135 for the Brent. So we're trading at the lower level of my intended range. So also there, I become a little bit more optimistic. And that is basically also linked to Chinese restocking. If you look at the Chinese data, in first quarter, basically, China oil demand growth was above 12%, which was really quite solid. And today we'll have additional data on imports and export coming out of China. But I see some clear compensation from China as well. So we're trading at the lower side, and I'm getting more optimistic also there again. So
you don't think that there'll be a slowdown in Chinese demand as we head towards next year?
I don't expect that. So basically, as I said, I see some restocking happening at this point in time.
And so how high could that drive the price of oil up? What are we looking at? Where might we be at the end of this year? I have 125 more or less as an end-of-year target, although in these days putting really point forecasts is probably rather pointless at this point in time. Okay, now one thing that I found quite interesting, you're remaining overweight in agriculture despite the market's focus on the impact of natural disasters and indeed other geopolitical events on demand.
That is correct. I'm still positive on the agricultural segment. On the supply side, you have those weather patterns, as you also mentioned already in the show. You have a lot of dryness in northern China, which is very important for wheat production. You have dryness in the south of the States as well. Obviously, we had the floodings in Australia as well. We have wet season in the northern parts of North Dakota, for instance, which is the top wheat producing state. So it seems to me that the supply side is very positive still for the agricultural space. And also there on the demand side, you see some structural shifts coming out of emerging markets with changing dietary habits, leading to additional meat consumption. That in itself demands additional animal feed. And you see that as being very supportive, specifically for corn, for instance, but also for wheat.
Koen Straetmans of ING, thank you so much for your time. Appreciate it.